The second part of the question says profit available 5 lakh rupees. In the problem it is given in the last sentence 5 lakh रुपए पहले से है और डिविडेंड पे करना है. How many shares are there? In the first line of the problem it is given the company is having 10 lakh rupees of equity share capital. Each share face value 100 rupees. कंपनी के पास 10 लाख रुपए इक्विटी शेयर कैपिटल है, एक शेयर 100 रुपए का है, तो 10 लाख डिवाइडेड बाय 100 you will get 10,000. You will get 10,000. So company is having 10,000 shares and dividend paid per share is 10 rupees. तो 10,000 into 10 1 लाख. तो 5 लाख रुपए में से 1 लाख रुपए डिविडेंड पे कर दिए, तो अब बचा हुआ अमाउंट 4 लाख रुपीस है. कंपनी को नया इन्वेस्टमेंट करना 10 लाख रुपीस है. द कंपनी रिक्वायर्ड 10 लाख रुपीस फॉर न्यू इन्वेस्टमेंट. अब वो 10 लाख रुपए में से इंटरनल पैसे कितने हैं? 4 लाख रुपीस. द कंपनी ऑलरेडी हैव 4 लाख रुपीस, तो 10 लाख में से 4 लाख रुपीस निकाल दो, 6 लाख रुपीस कंपनी रिक्वायर्ड. अभी 6 लाख रुपए चाहिए. अब मार्केट प्राइस पर शेयर व्हेन द डिविडेंड इज डिक्लेयर्ड, क्योंकि डिविडेंड पे कर दिए, तो जब डिविडेंड पे कर दिए तो मार्केट प्राइस पर शेयर 102 रुपीस. हियर वी गॉट द मार्केट प्राइस पर शेयर इफ डिविडेंड इज पेड इज 102. तो एक शेयर अगर मार्केट में बेचेंगे तो 102 रुपये कंपनी को मिलेंगे. एक शेयर के 102 रुपये. तो कंपनी को होना कितना है? 6 लाख रुपीस कंपनी को चाहिए. द कंपनी नीड 6 लाख रुपीस. तो 6 लाख डिवाइडेड बाय 102 you will get 5,883 shares. 5,883 new shares company must issue. तो अगर 5,883 शेयर इश्यू करेंगे एक शेयर 102 रुपीस में, तो कंपनी को 6 लाख रुपीस आ जाएंगे. वो कंपनी के पास पहले से 4 लाख रुपीस है और ये 6 लाख रुपीस रेज कर दिए तो 10 लाख रुपीस हो जाएंगे. कंपनी कैन मेक द इन्वेस्टमेंट. दैट इज द क्वेश्चन. राइट. नाउ सी द 15th one. 15th question. Excel Limited had 50,000 equity shares of Terich outstanding on 1st January. The company is having 50,000 shares of rupees 10 each. The shares are currently being quoted at par in the market. Face value 10 रुपये में है, मार्केट में इस वक्त 10 रुपीस में ही बिक रहा, तो पार वैल्यू पे बिक रहा मार्केट में. The company now intends to pay a dividend of 2 rupees per share at the end of current calendar year. कंपनी का इंटेंशन है कि ये एंड ऑफ द ईयर में 2 रुपये एक शेयर पर पे करेंगे डिविडेंड पर शेयर. इट बिलोंग्स टू अ रिस्क क्लास हुज अप्रोक्सीमेट कैपिटलाइजेशन रेट इज 15%. के यूजिंग एमएम मॉडल and assuming no taxes, ascertain the price of the company's share as it is likely to prevail at the end of the year when dividend is declared, and secondly when no dividend is declared. अभी जैसा करें exactly same. Also find out the number of new equity shares that the company must issue to meet its investment needs of rupees 2 lakh. Assuming that a net income of 1.1 lakh. 1.1 lakh means 1,10,000. 1,10,000 and has also assuming that dividend is paid and dividend is not paid. यानी कंपनी को कितने शेयर्स इश्यू करना पड़ेगा? टोटल इन्वेस्टमेंट रिक्वायर्ड 2 लाख. 2 लाख रुपए टोटल इन्वेस्टमेंट है और कंपनी के पास प्रॉफिट इस वक्त 1,10,000 है, तो कितने शेयर्स इश्यू करना पड़ेगा टू रेज द रिक्वायर्ड अमाउंट? अगेन वी हैव टू मेक यूज एमएम मॉडल. इट इज आस्किंग यू टू अप्लाई एमएम मॉडल. तो सेम, दिस इज प्रॉब्लम नंबर 15. According to MM model, the market price per share at the end of the year will be as follows. Same formula. PO, current market price per share. Current market price per share is 10 rupees. Previous problem में 100 rupees per share था. ये problem में 10 rupees. Dividend to be paid at the end of the current year 2 rupees. Problem में दे दिया. Dividend payable 2 rupees. Market price per share at the end of the year we have to find out. And KE, cost of capital. Cost of capital is given in the problem as 15%. That's it. Exactly same, only figures I am changing, right? The first question, if the dividend is declared, if the dividend is declared, that is D1 is equal to rupees 2. पहला question है when dividend is declared. When dividend is declared, D1 is equal to 2. Now I substitute. PO is equal to 10 rupees. D1 is equal to 2 rupees. And cost of capital is 15%. So P or 10 rupees, D1 2 rupees, P1 we have to find out, KE is 0.15. So here you will get 10 rupees divided by 2 plus P1 divided by 1.15. So what we'll get is 2 plus P1 is equal to 10 into 1.15. 10 into 1.15. So P1 is equal to 10 into 1.15 is 11.5. ये plus 2 इधर ला लिए तो minus 2. That is equal to 11.5 minus 2, 9.5. Market price per share at the end of the year if dividend is declared is 9.5. चलिए first answer complete. अगर कंपनी डिविडेंड 2 रुपये दे दी तो मार्केट प्राइस पर शेयर 9 रुपये 50 पैसा है. If the dividend is not declared, second question. If the dividend is not declared, so D1 is equal to 0. Now PO is equal to 10. D1 is 0. Plus P1 divided by 0.5. So it is 10. 0 plus P1 50. So here P1 is equal to 10 into 1.15 is 11.5. Therefore, market price per share if the dividend is not declared is 11.5. So, two questions we have completed. If dividend is declared, 9.5. If dividend is not declared, 11.5. That's it. Now we have to find out the number of shares required. Profit available. In the problem it is given profit available is 1,10,000. 1,10,000 is the profit available. Right? Now, profit available. Now dividend paid. How many shares are there in the problem? First line it is given 50,000 shares. In the first line it is given 50,000 shares. Into dividend per share is 2 rupees. So 50,000 into 2 is 1 lakh. Now remaining profit available 1,10,000 minus 1 lakh is only 10,000 rupees available. 10,000 rupees available. Right? Now total amount of investment required is 2 lakh. Amount available is only 10,000. Amount available is only 10,000. So amount required is 1,90,000. 1,90,000 is required. Market price per share when dividend is declared. When dividend is declared, market price per share is 9.5. Market price per share at the end of the year, if dividend is declared, is 9.5. New shares to be issued 1,90,000 divided by 9.5. That comes to 20,000 shares. The company has to issue 20,000 shares at rupees 9.5 per share. Market price 9.5. So 20,000 into 9.5, you will get 1,90,000. So this is the number of shares to be issued when dividend is paid. Similarly, it is asking you when dividend is not paid also. Take a pause and copy it down. number of shares to be issued if dividend is not paid. It is asking you to calculate in both paid as well as not paid. Now we have to find out number of shares if the dividend is not paid. The profit available $1,10,000 less dividend paid is 0. Remaining profit available. Now total amount of investment $2 lakh less profit available $1,10,000 $90,000 amount required. Market price per share if dividend is not declared is equal to rupees 11.5. Market price per share if the dividend is not declared is 11.5. Therefore, number of shares to be issued rupees 90,000 divided by 11.5. $7,826. That's it. 7,826 shares. Come on. So we have completed up to 15th problem. Now see the 16th one. The following information is available for Awami Corporation. EPS is 4 rupees. Earning per share 4 rupees. Rate of return on investment. Rate of return on investment R value. IRR 18%. Rate of return to shareholders, that is K, 15%. What will be the price per share as per Gordon's model if the payout ratios are 35%, 50%, 55%? It's very easy. 16th. EPS is given as rupees 4. Rate of return on investment R 18%, 0.18. Then K, cost of capital 15%, 0.15. Then what will be the, according to Gordon's model? The market price per share is P is equal to E into 1 minus B divided by K minus BR. So case 1, if the payout ratio is 35%, therefore retention ratio is 65%. B is equal to 0.65. Now we substitute P is equal to E, earning is 4 rupees. 1 minus 0.65 divided by KE, K is 0.15. Minus BR 0.65 into R value is 0.18. Now if you solve, you will get the value 42.42. 42.42. This is the value you will get if you solve this one. This is case 2. Now case 3. Case 2. Case 2. Case 2 is if the payout ratio is 50%. So retention ratio 50%. B is equal to 0.5. Now again you apply the same formula, you will get the answer. Then case 3. DP ratio is 55%. Retention ratio is 45%. जब 55 पे कर रहे हैं तो retention will be 45. तो B is equal to 0.45. Then P is equal to rupees. I am simply giving you the answer because you have to make your own calculations. So case 2 you will get 33.33. And case 4, case 2 you got. Case 3 you will get 31.88. These are the answers you will get. Come on, take a pause and find out the total. Now, see the 17th problem. Calculate the market price per share of XYZ Limited as per Walter's model for the following data. R is equal to 8%. This is problem number 17. R is equal to 8%, comma, 10% and 12%. And KE is equal to 10%. EPS is equal to rupees 100 and DP ratio 0%, 50%, 75% and 100%. See, in this case Walter's formula we have to apply. As per Walter, P is equal to D plus R by KE into E minus D divided by K. This is the formula as per Walter. Now, in order to find out the market price under different situations, we are having 3 internal rate of return: 8%, 10%, 12%, and 4 DP ratios. Right? So, just I am giving you the structure. You have to calculate yourself, because already this type of problems we have done. R is equal to 10%, 0.10. R is equal to 12%, 0.12. Case 1. DP ratio is 0%. So D is equal to 0. D is equal to 0. So you have to substitute P is equal to 0 plus R. How much is the R? 0.08. KE. KE is 10%. E minus D. E is 100. Minus 0 divided by 0.10. P is equal to. Like this you have to calculate. Now case 2. DP ratio is 50%. So D is equal to 50% of EPS. 50% of EPS is rupees 100. D is equal to 50. Now you have to substitute P is equal to 50 plus 0.08 divided by 0.10. 100 minus 50 divided by 0.10. Like this you have to calculate. Then case 3. DP ratio is 75%. D is equal to 75% of 100. D is equal to 75. Right? Then case 4, DP ratio is 100%. So D is equal to 100% of 100. So D is equal to 100. P is equal to 75 plus 0.08 divided by 0.10 into 100 minus 75 divided by 0.10. P is equal to 100 plus 0.08 divided by 0.10, 100 minus 100 divided by 0.10. Here the values you will get 800, P is equal to 1000, P is equal to 1200. Then 900, 1000, 1100, 950, 1000, 1050, 1000, P is equal to 1000, here also P is equal to 1000. So if you make the calculations, you will get these answers. Now it's your job to make the calculations and find the answers. Now, see the next problem. It is 18th. A firm's expected net earnings per share EPS are rupees 20. Capitalization rate KE is 16% and the rate of return on investment 17%. What should be the price of the share if the dividend payout ratio is 50, 75, 100? Assuming Gordon's model. Easily you can do it. This problem you can do it as practice. Already we know. Individually we have to calculate. Gordon's model, P is equal to E into 1 minus B divided by KE minus BR. बस एक एक टाइम पे जो है payout ratio दिया, but for Gordon we don't require payout ratio. We need retention ratio. When payout ratio is 50%, retention ratio will also be 50%. B is equal to 0.5. Payout ratio 75%. So retention ratio is 25%. So B is equal to 0.25. 100% payout ratio means retention is 0. So B is equal to 0. The answer for this problem I'll write down on the board. You can take the answer for this problem, 18th one. ABC. Three answers are: first one, rupees 133.33. Second, case 2, rupees 127.66. And case 3, rupees 125. These are the answers you will get if you apply Gordon's model. Note down the answer and practice yourself. 19th problem. Problem number 19. PQR company requested you to compute the market price per share and the value of the firm when you have 100% dividend payout, 100% retention and 50% dividend. Comment on using Walter's model. Next page it is given. The following information is available. Earnings per share EPS 10 rupees. Cost of capital KE 10%. Required rate of return on investment 20%. And outstanding equity shares of 1 lakh each at rupees 100. 1 lakh each at rupees 100. So this is the problem number 19. See here, the following EPS, E is equal to rupees 10. Then cost of capital KE is equal to 10%. R is equal to 20%. Then number of shares is equal to 1 lakh. Now we have to apply Walter's model. According to Walter, P is equal to D plus R by KE into E minus D divided by K. Case 1. 100% dividend payout. D is equal to 100% of EPS. That is equal to 100%. Earnings per share is 10 rupees. D is equal to rupees 10. तो P is equal to 10 plus R कितना है 20%. KE 10% into E minus D. P is equal to rupees. $10 plus 0.2 divided by 10, you will get 100 rupees. Value of firm is equal to number of shares into market price. Market price per share. तो 1 lakh shares into rupees 100 is equal to rupees 1 crore. 1 crore is the market, is the value of the firm. The new point in this problem is, apart from value of share, it is also asking you to calculate value of the firm. तो वैल्यू ऑफ द फर्म मालूम करने के लिए नंबर ऑफ शेयर्स इनटू मार्केट प्राइस